In this video, traders, we are going to look at the top 5 Forex questions. Stay tuned. Hey guys, a very warm welcome to you. All right, so what are the top 5 Forex questions according to Google? Let's answer them. Perfect if you're a beginner Forex trader, just kind of trying to find your feet, trying to work out all the things, how it all works. What does this mean? What does that mean? These are top 5 Forex questions. Got loads more on the channel as well, so make sure you check those out. Okay, so first one is, what does Forex trading really mean? So Forex trading is really trading or speculating on the difference in one currency against another. So in real simplified terms, all you're doing is you are speculating or betting on the direction of one currency pair, and a currency pair could be US dollar against Japanese yen, for example, and so you're betting on how strong or weak one of the relationship between those two is. It sounds overcomplicated, but ultimately you're looking at something to increase in value if you're buying the pair, and for the pair to decrease in value for selling the pair. Now, I've done a real deep video where we talk about the relationship between strength and weakness between the two and what the cross action means, but ultimately Forex trading is betting, if you like, on the exchange rate increasing or decreasing between two specific currencies. That's ultimately what you're trying to do. And Forex, foreign exchange, some people call it currency trading, same kind of thing, but basically speculating on how that exchange rate changes over time. Whether it's a short time frame, could be a few minutes, a long time frame, could be a few years, but there's speculation on that exchange rate changing. Okay, number 2, why should I consider trading Forex? Well, you know what? To me, trading is trading, okay? And you shouldn't necessarily say, all right, well, I need to trade Forex and rather than trade this or that. But let's stick with Forex for now. If we're talking about trading Forex specifically, Forex benefits are very, very cheap to trade relative to a lot of other things. Stocks can be quite expensive when it comes to the spread, which is basically your cost to trade. Your commissions, generally you won't have commissions, or the spread plus the commission, which is your really total cost, will be a lot smaller generally for Forex if you're trading with the correct broker, especially if you're trading some of the big, more popular Forex pairs. So the cost to trade is relatively low. Margin requirements, they've changed slightly depending on where you are in the world, but historically they've tended to be less than, say, trading stocks directly or trading futures contracts. It does depend. It depends on what you're doing, but generally speaking, that's the case. There's a lower barrier to entry. In other words, most Forex brokers will let you open an account with a smaller amount of money than, say, a larger broker that specializes in stocks or shares, just because of the higher value that you've got to be trading to kind of get some movement. So the leverage is the margin, so that gives you more bang for your buck, so to speak. There's lots more resources out there for Forex. It's super, super popular. Loads of content out there, loads of videos, go to places like YouTube, loads of educational material as well, loads of stuff that you can get yourself stuck into. Now, careful you don't make that a double-edged sword and start over kind of consuming content you don't need to, but you, at least if there's a big kind of library of stuff out there, you can pick things that you like and kind of dig into it. So that's one of the advantages of Forex trading compared to, say, trading crude oil, for example. Not so much, not so popular, a little bit more expensive, this, that and the other. There's probably a question there is, why should I consider trading full stop? That's a broader thing, but trading Forex, there's lots of benefits. There's loads of liquidity as well, but I'm always a bit skeptical of that argument, guys. You know, liquidity is massive in Forex, but unless you're trying to throw around 100 million pounds or equivalent very, very quickly, it's not going to affect people like you and I with a retail trading account. Okay, number 3, is Forex trading risky? Yep. All trading is risky. We've said that. Disclaimers at the end of all the videos. It's there for good reason, because it is super risky. The chances and likelihood is you will lose money trading. Over time, the hope is and the plan is that you recover that and you start to make some money, but the risk is still there. But in the beginning, almost certainly you lose money. Why you shouldn't be trading with any money you can't afford to lose. You should understand that you can lose a lot of money, and there are ways to mitigate risk. We talk about stop loss, we talk about keeping low position size, and there's just a couple. I've done a video specifically on that, but if you keep your stop losses strict, you keep your position sizes small, you can lower and mitigate the risk. You can't eliminate it completely. There are things that can happen, which means you can have a significant loss to your account, and in some cases Depending on where you are in the world, there are some legislations that prevent this, but you could lose more than the money you have into your account. So make sure you're fully aware of what's going on. It's super risky, but then you can get extreme reward with it. And it's the same with anything in life, guys, isn't it? Big risk, big reward, and that's the game that we're ultimately playing. All right, number 4, how can I trade a currency I don't have? Now, if this question is related to buying a currency or what you're trying to speculate in, so, ultimately all you're doing is you're speculating on the exchange rate between two. So let's say, stick that initial example, we had US dollar versus Japanese yen. How many US dollars does it take to buy, or how many Japanese yen can I get for $1 US or the other way around? That's and that will just flip the kind of the pair that you're quoting, but that's ultimately what you're speculating on. Now, okay, if you were going to buy the currency and you're actually buying the physical currency, so to speak, you'd have to have a currency to exchange it in. So for me, being in the UK, I'd go and I'd use my British pounds and I'd buy Japanese yen, and let's say I was buying literally notes so we can visualize it. I would still have an exposure then to the currency exchange rate between the pound and the yen, right? If that went in my favor, then when I sold those yen back, I'd make a bit of money. If it didn't, when I sold those yen back, I'd lose money. So that's ultimately what we'd be doing if we were in your home currency. But if we're speculating on another currency, all we're doing is we're literally speculating on the exchange rate between the two. And if we don't own the currency, we can do stuff like spots, we can do stuff like futures contract, we can do stuff like options. We're purely simplifying it. It's just speculating on the movement of those two currencies, the exchange rate between those two currencies. And that's what we're doing. We're not necessarily taking ownership of currency. Yes, technically, if we are trading under certain vehicles, we are taking an exposure in that currency, which might give an additional exposure elsewhere. But there's no need to overcomplicate stuff, guys. Very, very simply put, we put some money to use as margins, collateral if you like, for the trades that we're taking, and then we use that to speculate. And if we make money, we make money and it goes into our trading pot. If we lose money, it comes out of our trading pot. That's ultimately what we're trying to do. And number 5, how can I compete with the big institutions and banks? In many ways you can't. Okay, you don't have a lot of the research, a lot of the all the resources these guys have. But the good thing is you don't need to. We don't need to be trying to trade all day, every day. We don't have pressure on us to produce a certain amount. We can trade when we like. We're very small in relation to size. We have to worry about splitting up trades into tranches or blocks to try to minimize the effect on the market. We're a very good advantage. And don't forget, guys, that banks and institutions now, particularly now in 2019 when I'm doing this video, things may change, of course. Big banks and institutions aren't really speculating on currency exchange rates at all, or as much as they were a long time ago. They're taking orders from big companies, from governments, from big individuals potentially, and they're making money on that transaction. So they're making money on if there's a complicated transaction they're putting together, let's say some sort of hedging transaction for a company that's you've got some sort of foreign exchange risk, then they make money on that. They make money on this, and yes, they do speculate in some ways, but it's far less than they would have done before. So yes, there are obviously some firms that are purely out there to speculate on exchange rates and currencies, like hedge funds, for example, like proprietary trading firms. And if we're talking about competing with those, we're trading a different thing. We're not looking to, maybe you are, but those hedge funds generally are looking for changes in the macros, economic shifts and sentiments, and then place a bet on that country via their currency against another currency they believe would outperform the other way and be strong, but that one would be weak, or they'd do a currency that was weak compared to that one being strong, whatever it was going to be. So they're on a different kind of approach to us. So we don't need to, guys. The main competitor we've got is our own mind. It's us. We're our main competitor. We're the ones that we've got to kind of get in check and work out how we're going to do things. That's what we should be looking to compete with ourselves, becoming a better trader each day. as opposed to thinking about, hey, I'm competing with these guys with massive resources, super intelligent people sitting in rooms with lots and lots of money. Forget about that. We're not trying to compete with those. We're trying to do our own thing. There's enough kind of money floating around there for us to just dip in when the time's right, pull out some bits and pieces, and hopefully over time that will accumulate, but not being ignorant to the fact that there's a very, very high risk with it. All right, guys, those are the top five Forex questions according to the Big G Google. Take care. Keep the risk managed. Bye-bye.